Hello, this is section 19.1 talking about inventory methods, and you'll notice that you can use your calculator on a floating decimal or you can just use a regular old calculator. So these are the four different types of inventory methods we will discuss, and number one, specific identification. We won't actually work through any examples on that, but I will explain it. So number two is weighted average. Number three, that's called first in, first out. And number four is last in, first out. And we'll talk in more detail about that. So those are just abbreviations for that. First in, first out, last in, first out. With specific identification, this is one where you actually count every single individual item and how much that item is worth, and that means that it's very time consuming. Now there are some types of businesses that would want to do this, like car dealerships and jewelry stores, and I'm sure there are many others, but it is one of the ones that would be the most difficult really to do. And for us, any examples would be, way too long for us to even do. So if you ever involved in this type of thing, you just count everything, identify it, and then what's the price of that item. So we have some vocabulary. Beginning inventory. These are the items that were already in the store at the beginning of the new year. And so most likely that would be in January, right? Here's what we have in stock at this moment at the beginning of our new year. Now, sometimes there are fiscal years, and so that might start in a different month than January, and that certainly could be the case. For us, I think mostly we're going to look at it like beginning inventories in January. Ending inventory would be the items that are not sold at the end of the year. Oh, and most likely it's going to be January through December for tax purposes and those kind of things when you're looking at inventory. So then ending inventory is the items that you still have at the end of that particular year. So you have the beginning of the year and the end of the year. So that's this one. I'm just going to circle it there. So if you still have stuff sitting on the shelves, that would be part of your ending inventory. So we're going to start with weighted average. So this is based on an average cost per each item, or price, the average cost per item. Because as they come in, you will see when we get to our chart, they cost different prices, but we're just going to find an average of all those prices. So you take the total cost for sale and you divide that by the number of items available. Then you take that amount and multiply it by the number of items in ending inventory. Now, sometimes students mess up on this because they don't round their average to dollars and cents, and they leave it on the calculator not rounded, and then they're off just a little bit. Now, on this chart, basically you just multiply straight across 23 hammers times 4, and I left some of these where I didn't go ahead and put the amounts on there. So this one's 92. Remember, I already have these figured out. 144, 187.50, 114. And then we're going to find our total cost, right? So right here, we're going to add those all together. And then we're also going to add these all together because we need both of those completed. So the total cost of our inventory for that year is $708.50. Double checking my numbers here. Okay, $708.50. And then if we add up all the number of hammers, by the way, we're talking about hammers, the number of hammers for that year would be 174. In my ending inventory, notice I have 72 hammers. So that means how many hammers were left at the end of the year. Okay, so the number the total number, or the number of hammers available for sale. Oh wait, I missed the total cost. The total cost is $708.50. I don't know why I just ignored that part. The number of hammers for sale was 174. And so the average cost of one hammer would be the cost divided by the number of hammers, right? Cost per hammer divided by 174. And you have to be sure and round this, and don't leave it on your calculator. Enter it back in so that you actually know how much it was per hammer in dollars and cents. And it would be $4.07. And then it says the value of ending inventory. Remember, my ending inventory was 72 hammers. So we take $4.07, multiply it by 72, and that's going to be the value of our ending inventory for those 72 hammers. And that comes out to $293.04. All right. The next method we're going to talk about is FIFO, first in, first out. And this means the first items purchased are the first items you sell. And so as they come in, you want to sell, you want those to go out, right? First in, first out. And so that might be an example of food, right? As the food comes in, we want to sell whatever came in first. We want to sell that first. And so that would be pretty normal for food. And anything that's perishable would make sense. Ending inventory will consist of the most recently purchased units. So figuring out how to calculate this can get a little tricky, okay? And so we have another chart here to fill out, and my totals are 171, 144, 187.50, and 114. And then we notice that our ending inventory is once again 72 units, and we had a number in beginning inventory, and we have to consider that when we're talking about these, depending on which one we're working on, FIFO or LIFO. So first in, first out, last in, first out. So which ones are left? Well, that would, if it's first in, first out, then I would have sold my beginning inventory. I would have sold next my inventory I purchased in February, then March, and so on, if that makes sense. So it would be the last items purchased. That's where I go for my 72 hammers, right, to the last items that were purchased. And so when we're figuring this over here, we kind of have to decide, what am I going to take from here? So I need 72. And if I start with, right, I have these 24 hammers times 475. So that's part of my hammers. If I get 48. So on the next category, I would need to do 48 times 375, because if I add 48 and 24, then I get 72 hammers. So on this next screen, we're going to multiply that, right? So 24 hammers times 475, and remember we had to start at the bottom of the chart. So first in, first out. If you can remember, oh, I go to the opposite end of the chart, right? It's saying first in, first out, and you're thinking the top of the chart, but no, it's at the bottom. So that was $114. And then I only needed 48 of the 50 on that next line of my inventory numbers, and that's a total of $180. When I add these together, I get 72. When I add those together, I get $294. And so that is the value of ending inventory, $294. And you guys will notice that with each method, if we're using the same number of hammers in the same inventory, that our ending inventory is going to be fairly close in value. It won't be there won't be a huge difference. All right, let's do last in, first out. That means the most recent items purchased are the first items you sell. And then ending in inventory will consist of the older units. So think last in at the bottom of the chart, but to find my ending inventory, I go opposite to that at the top of the chart, right? Last in, first out. So the last items I purchased, I'm going to sell first, and then I find my inventory at the top of my chart. All right, so let's look at this. I don't know why I left, well, I left all these numbers off because when I'm teaching in my seated classes, then I didn't want them to have all these numbers. So I left them off of every chart because they have the PowerPoint slides in front of them. So which ones are left? That would be the first items purchased at the top of my chart, and that includes my beginning inventory, right? First items purchased, or the first items on my chart. Obviously, if it was already in the inventory at the beginning of the year, it was purchased before February. That would make sense. Okay, so to compute the value of the ending inventory for last in, first out, we go to the top of the chart, and we have 23 items at $4. Now remember, we still have 72 items in our ending inventory. It's right there on the top of the chart. And so if we use 23 of them, all right, we're going to use that one, the one I have circled, and we need 49 more. So we're going to have to use 45 here. Right, so now I have 45 plus 23, and that's 68, so I need 4 items from this category. So on this calculation, I had to go with 3 different prices of hammers, right, and calculate that. So 23 hammers times $4. And then I had 45 hammers that were $3.80 each. And then just 4 hammers from the category where they were $4.50. So calculate each one of those, 92, 171, and 281. When I add up my total number, my hammers here, I get 72 as my total. I just wrote the actual total. This was just $18. I got ahead of myself there. My total was $281, so that is the value of ending inventory. And I'm going to have to stop the video now and start on a new video for more of this. So I'm going to pause right now.